Now we have seen supply. Supply attracts the tax, right? Supply is the event of taxation. Now the question arises, when are you liable to pay tax? When, I mean the time when you become liable to pay tax. Should I pay tax in January, or should I pay tax in February, or should I pay tax in March? When should I pay tax? So somebody would say that okay, when supply takes place, you pay tax. But that is the question, that when can we say that supply has taken place? When I deliver the goods to you, when I deliver the goods to transporter for delivery to you, or when I make an invoice, or when you make payment to me. There are so many events taking place. The global concept is called a supply, but there are so many intricate things happening. So which point can be called as the point of supply? Because these can be spread over months sometimes. I send the goods to you, then I make an invoice, then you make a payment. So there can be long gaps. So when can we say that supply has taken place? That is the main question. And to answer that question, we are going to see this chapter called as time of supply. Okay. So let's start with section 12 first. Section 12 determines time of supply of goods. And then we'll go to section 13, which will deal with services. Okay. Let's start. 1. The liability to pay tax, see, the liability to pay tax on goods shall arise at the time of supply as determined in accordance with provisions of this section. Then subsection 2 says, the time of supply of goods shall be earlier of the following dates. Earlier of the following dates. So there are two A and B clauses given there, but actually there are 3 points that we'll see. There are three timings that we have to see, and then choose whichever is earlier. Okay. But then there are some exceptions also. There is a notification also. So we'll go step by step. First we'll see what the law says. Then we'll see what the notification says, what exemption the government has given. And therefore, then we'll at the final step, we'll see the conclusion, that what we have to do right now. Okay. So see, clause A. Clause A says the date of invoice, the date of issue of invoice. Underline, issue of invoice, the actual date of issue of invoice by the supplier, or the last day on which he is required under subsection 1 of section 31 to issue an invoice with respect to the supply. So you can say this is the actual date of invoice, and the second one is the due date of invoice. This we can call as the due date of invoice, the last day on which he should have issued the invoice as per section 31. So section 31 is the invoice section. This we'll see later on in the chapter of invoice. Okay. So section 31 says, subsection 1 of section 31 says that in case of goods which are supplied through the transport, the invoice has to be issued when the goods are given to the transporter, handed over to the transporter for supply to the recipient. Means where the transportation is involved, the movement is involved. Okay. Now everything is given there, so just listen first. If movement is involved, section 31 says invoice has to be made before the goods are handed over to the transporter, means before the movement begins. And if there is no movement, then invoice has to be made before the delivery, before the actual delivery. Means you go to a shop and purchase some goods, they will make an invoice, and they'll make an invoice and give it to you, take payment, and then deliver the goods to you. So at the time of delivery. Okay. So invoice has to be made before the movement or before delivery, as the case may be. So normally the invoice will be made by that time. But suppose if it is not made. Suppose if it is not made. If you deliver the goods but you don't make the invoice, then out of the two, which will be earlier? The due date will be earlier. So we'll take the due date. So out of the actual invoice date and the due date, we are going to take any one. Okay, actual or invoice, whichever is earlier. Actual invoice or the due date of invoice, whichever is earlier. Now, normally the actual invoice will be made before, say 5 days before you make the actual invoice, and then after 5 days you deliver the goods. So then we'll take the actual invoice date. So whichever is earlier. Understood? Very simple. So that is the first point. Or number 2, the date on which the supplier receives the payment with respect to the supply. Underline receives the payment. So to understand and to remember, we'll write 2 words which you are accustomed, because you are accountancy students, so you are accustomed with 2 words: accrual and receipt, whichever is earlier. So simple to remember. So what do you mean by accrual? When the invoice is made or the due date of invoice comes. So due date of invoice or the actual date of invoice, whichever is earlier, will be called as accrual. This is for remembering sake. Don't write these words in the exam, okay? Because the invigilator may not understand these words. So these are for you to remember. So one is accrual, invoice, actual or the due date. And second is actual receipt. So whichever is earlier will be the point of supply, will be the time of supply. Okay? Very simple. Great. So if receipt is earlier, that is, you haven't made the invoice but you have received the payment, that we call as advance receipt, right? We call it as advance receipt. So if the receipt is earlier, that is called as advance. Means as per the law, you are required to pay tax on receipt of advance. You are required to pay tax on receipt of advance. Even though the supply is not made, even though the actual goods have not been supplied, even though no invoice is being made, but you have received the payment in advance, then that advance will be liable to tax. Okay, so that will become the point of supply, the time of supply. But in due course of time, I will tell you a notification which has exempted the receipt for the time being, which is exempted tax on receipt. Means clause B is actually in practical life not applicable right now. Okay, so it means that tax is payable on accrual basis only, that is when you issue the invoice or when the due date of invoice comes. Let's see, we'll read that notification. But before that, we have to go through the whole process. Step by step we'll go. So below that is a proviso. Let's see what the proviso says. Provided that where the supplier of taxable goods receives an amount, underline, up to ₹1,000 in excess of the amount indicated in the tax invoice, the time of supply to the extent of such excess shall at the option of the said supplier be the date of issue of invoice in respect of, underline these words very carefully, in respect of such excess amount. In respect of, which invoice are we talking about? In respect of such excess amount. What did you understand? Nothing now. So let's see. But don't worry, you will understand everything. Okay. So what happens is that there is a supplier and there is a recipient. Okay. Now say for example supplier is Farooq Haque classes and recipient is you, the student. You can write your name here. Okay. Now I supply you with a DVD, whatever the goods. But again you will confuse, sir. Then you'll ask a question to me, is this video lecture called as goods or service? So let's avoid that. I am also seller of goods. What goods? Mobile phone. Okay. So for example, we'll take phone and not these DVD lectures. Okay. So I am selling phones, mobile phones, and you have ordered for one. Now the invoice that I'm issuing to you is of 13,600. It's a normal mobile phone, smartphone. 13,600 is the invoice. Now what the student should do? He should pay 13,600. But I don't know how and why. But the student pays me. Okay, just for a second. This invoice is made at the time of supply itself. Means the due date and the invoice date are the same, and that is 10th January. So the invoice is issued on 10th of January. 13,600 is the amount. The student pays me 14,000 rupees. Means 400 in excess. And this payment is received on 19th January. Now the point is that as far as this invoice is concerned, that is of 13,600, the time of supply would be the earlier of the two dates, 10 Jan or 19 Jan, means 10 Jan. So TOS we'll write in short, time of supply. Okay, time of supply for 13,600 will be 10th of January. No problem with that. Okay. Now the question comes, what is the time of supply for that 400 rupees excess that you have paid me? What will be the time of supply for excess amount of 400? Right. So let's see. So here the proviso applies. Now what the proviso says, that at the option of the supplier, the time of supply can be normal as per subsection 2. So if we apply subsection 2, then what would be the time of supply? Because this 400, okay, leave aside that subsection 2 and the proviso. Forget. Let us first understand that why you have paid me the excess amount. First we'll start from there. Okay, so the point is that why have you paid me 400 excess? Are you mad? No. Are you foolish? No, not at all. But you have paid me 400 excess because there will be some further supplies. Okay, so it might be that you have also ordered some extra material to be given, like some accessories or something has to be given to you. Means you have bought that accessory also, but it is not available with me right now. So I have said that give me that 400 excess, and as soon as the accessories come, I will supply it to you. I'll call you up, you come and collect your accessories. Okay, so that might be a reason. Means there is a chance of further supply. That is one of the point. Second is by mistake. You have paid me 400 by mistake. There is no further chance of any supply. So in that case, what I'll do is I'll refund the amount to you. As simple as that. Will I keep that 400 in my pocket illegally? No, of course not. I'll refund. So now there are going to be two things. The excess amount that you have given will be either refunded. If it is refunded to the recipient, will there be any tax on that? No, there is no question of tax. If I refund the amount to you, there is no question of GST. So no GST. So no GST means no need to calculate any time of supply. Nothing. No GST. But if adjusted against future supply, if it is adjusted against future supply, then the question comes that when does that future supply happen? So that future supply happens on, say, 23rd of February of total amount 3,000. So in this bill of 3,000, what I'll do is I'll adjust that 400 that has been received. The 400 I will deduct, and then I will recover the balance 2,600 from you. So I'll adjust less adjustment of 400, and then recovery will be 2,600. Okay. So now the question is that what will be the time of supply of this excess amount received? So now again there can be two situations because you have the option. Option 1 is the normal routine, subsection 2. So if you follow subsection 2 itself, then it will be the date of receipt or the date of invoice. So date of invoice in respect to this 400 is this invoice, not the first invoice. First invoice was not with respect to this 400. It was for that another supply of 13,600. So the invoice with respect to this 400 is this invoice, which is issued on 23rd of Feb. So invoice we'll write 23rd Feb, or the receipt, which is on which date? 19th of January. We had received this 400 advance on 19th of January. Okay, so this is one. Take whichever is earlier. So whichever is earlier means 19th Jan. Means you pay tax on receipt of advance itself. When you receive the advance, you pay tax. Option 2. Now please write down. We are calculating TOS of this 400, not of this 2,600. Okay. So the second option is the proviso. Now what the proviso to subsection 2 says, that don't take the receipt into consideration. You just take the invoice with respect to this 400 rupees that you will issue in future. That is 23rd of Feb. So 23rd of Feb itself will be the time of supply. Now you'll ask me, sir, why this option is given? Good question. See, the option is given because many a times what happens is that the excess amount that you have paid me 400 rupees, it might not be for any particular goods. We don't know which goods I am going to supply in future. So you have just given me some excess amount, and then I have not told you which goods I am going to supply, because the accessories are yet to come. As and when they will come, then I'll tell you that look, these are the 4 options available, you buy any one of them, and then I'll adjust that 400 against the one that you choose. So the rates may differ. If you buy item A, the rate will be different. If you adjust 400 against item B, the rate will be different, and different for C and different for D. So when I took that 400 advance from you, I don't know what rate it is. I don't know what goods I'm going to supply. So I don't know the rate. How will I pay tax? How will I pay tax on receipt of advance? That is on 19 Jan. I don't know the rate of tax. It's just an advance received, but I don't know which goods I'm going to supply. So therefore they have given the option that if such a situation arises, you don't know the rate, then you can wait. You can wait for the future, and as and when the invoice is made, at that time you take time of supply, and then you know the rate, you pay the tax. Simple. Understood? Very good. So if you want to take down, you can take down the whole thing. Okay, so press the pause button and take down. So understood? Read again the proviso. Provided that where the supplier of the taxable goods receives an amount of up to 1000 rupees. Now this option is only for up to 1000, means some advance received, some excess amount that was received as advance, you can say. But this proviso doesn't apply to more than 1000 rupees. So if the bill is of say 8000 and you pay me 10,000, means you are paying me 2000 excess, then that 2000 will be dealt with by subsection 2. That is whichever is earlier, the receipt or invoice, whichever is earlier. Okay. So this is also, you can call it as postponement of tax, that we have received advance but we are not paying tax on advance received. We will be paying tax as and when the invoice will be issued. Means you are postponing tax. So this postponement of tax is allowed only when the advance is up to rupees 1000 or less, not more than that. Great. Then let's move ahead. Explanation 1. For the purpose of clause A and B, supply shall be deemed to have been made to the extent it is covered by the invoice, or as the case may be, the payment. Now again, what did you understand? Nothing. It's very simple. It's very simple. What it says is that if the invoice is made in parts or the receipt is in parts, then we will consider it to be different supplies. We will consider it to be separate supplies. For example, a contract is being made to supply 5000 units. Okay, supply of 5000 units is involved. But say on 10th of January, I supply 1000 units. So I make an invoice, first invoice 10 January of 1000 units. Invoice made and payment received. Okay, so let's first take invoice, then I'll take payments. So one invoice. Then on 17th of February, you supply further 2000 units under the same contract, and again you make an invoice. And then on 15th, let's take March, you supply the balance 2000 units and you make an invoice for that. So what we'll do, will we consider one date out of the 3 as time of supply for full 5000 units, or we'll take separate dates for different units? So the explanation says take separate dates for different units. So even if you supply part of the contract, that will be considered as one supply. So this will be considered as one supply, this will be considered as one supply, and this will be considered as another supply. Okay, very simple to understand. Then on the other hand, there can be a situation where I make one invoice of 5000 units on 10th February. So invoice is one, but the payment is received in part. So 30% payment received on maybe 2nd of Feb, that was in advance. 30% payment received on 15th of Feb, and the remaining 40% payment received on 17th of March. This can also happen. The payments can be received in parts. So in this case, what will happen? As per the Act, before we see that notification, so as per the Act, if we follow the Act, so for this 30% amount, the time of supply will be 2nd or 10th, whichever is earlier, means 2nd. So this will become time of supply for 30%. Means if the invoice is of say 1 lakh and this is 30,000, this is 30,000 and this is 40,000, then what will happen? For the first 30,000, first time of supply, that is for 30,000 rupees, will be 2nd of Feb. whichever is earlier. And for the balance 70,000, it will be invoice, because invoice is first 10th of Feb, and then the receipts are there 15 Feb and 17 March. So for these two supplies, although since there is a separate payment, they will be separate, they will be considered as separate supplies, but for these two it will be taken as the date of invoice 10th Feb. So I'll combine and write that second time of supply for rupees 70,000 would be 10th Feb. That is the date of invoice. Understood? So such situations may arise, that where the bills are issued in parts or where the payment is received in parts. So in such situation, each payment will be considered as a separate supply, each invoice will be considered as a separate supply. And then there can be a combination of the two, that invoice is also in part and the payment, I mean to say receipt of payment, payment received, can also be in part. Like first part of the invoice is of 1000 units for 2 lakhs, and this 2 lakhs is received in two parts. 1,50,000 received at one go and 50,000 at a different point of time. Then there's a second 2,000 units, total amount 6 lakhs for example, and again received in 3 parts, 2 lakhs, 3 lakhs and 1 lakh. So it can happen. Total contract is of maybe 10,000 units. So supplies can also be given in parts, and then out of that one supply the payment can be received again in parts. So what we'll do here is see the invoice date. If the invoice date is say 3rd of March and the payments are 20th of Feb, one before and one after, let's take all the examples. So one is before. So for this 1,50,000, the time of supply will be 3rd March or 20th Feb, whichever is earlier means 20th Feb. And for this 50,000, which is received on say 10th March, the time of supply will be 3rd March or 10th, whichever is earlier, so 3rd March. And similarly we'll do in this case. So on every occasion what you have to do is check the invoice and the receipt and take whichever is earlier. Very simple. Okay? Done? Great. So that is explanation 1. Then explanation 2 says, for the purpose of clause B, means the date of receipt of payment. Clause A is about invoice, B is about receipt. The date on which the supplier receives the payment shall be the date on which the payment is entered in his books of accounts, or the date on which payment is credited to his bank account, whichever is earlier. Another interesting point. Now we saw that we have to see the date of receipt of payment. Very good. But the question is, what is the date of receipt of payment? Now if the amount is received in cash, rokda, cash, if it is received in cash, then the date of entry in books, the day when we make that voucher, receipt voucher, and we enter it into the books, that is the date of receipt. There is no question. But if the instrument, if the amount is received by any kind of bank instrument, if it is received by any bank instrument like check, demand draft, etc., then you have to apply this explanation 2. So if the receipt is by cash, then there will be only one date, the date of entry in the books, if you enter in books. If it is out of the record sale, then there is no GST. It will be black money transaction. But if you receive the money through bank that is bank instrument, that is check, demand draft, online payment, etc., etc. Then what we'll consider is the date of entry in books. Like for example, you give me a check today, 19th. So I make an entry in the book on 19th, that check received. But the check will go into clearance on the next day. Then suppose if there are bank holidays in between, then it will take 3, 4, 5 days time to clear the check. If there is no bank holiday, then maybe 1 or 2 days to clear the check. So when the check gets cleared, it is entered in my bank. So credit in bank account comes on a different date. Okay, so if our accounting is proper, the date of entry in books will be earlier and credit in bank will be later, because you give me check, I make an entry in books, then I put it for clearance, it comes in my bank. So entry will be first and bank credit will be later on. So we'll take date of entry in books. But suppose if I am not writing my books correctly and promptly, then what happens is that you give me a check, I put in bank, it gets cleared and it is reflected in my bank statement. But 2 months thereafter I make entry in my books of accounts. So then what will be considered as the date of receipt? The credit in bank account. So we have to take whichever is earlier. Okay. And the basic purpose of putting this point, credit in bank account, is to stop people from postponing their tax. Right? If they would have only given entry in books, that whatever date you enter in the books, that is considered as the date of receipt, then people would postpone the entries in the book. They will put the check in the bank, the check will get cleared, money will come in my bank account, but I will not pass a journal entry. I will not pass an entry. I will postpone the entries. And by postponing the entries, I may postpone the liability to tax. So government says, no, you cannot do that. You make an entry in your books, but if the bank credit is earlier, then we'll take that date, the bank credit, as your receipt. So that's why they have put this point also, credit in bank account. So understood now? So finally what we are going to do is, right now we have not seen that notification. So as per the law, till now what we have studied is accrual, receipt, whichever is earlier, right? Accrual means earlier of the two, the actual invoice or due date of invoice. So we are going to take earlier of these two. And receipt means book entry or bank credit, whichever is earlier. So out of these two, whichever is earlier is my accrual. Out of these two, whichever is earlier is my receipt. Now I am going to take, and on the top you write TOS of goods. And now earlier of these two will be my time of supply. So this is the final conclusion statement before we see the exceptions. So pause the lecture and take down. Okay, I'll move. And now comes the notification. Now, after reading this notification, you will put your hand on your head and say, sir, why did you waste so much of time in telling all the logic of accrual and receipt? Because these notifications are temporary. Law is permanent. So therefore you must always know the law. Tomorrow this notification will go. And when the notification doesn't stand, it is withdrawn by the government, the law will stand and you have to do as we have seen earlier. But now let's see what the notification says. So, and I'll tell you why this notification has come into picture, why it was issued by the government. Let's go behind the scene. In earlier times, that is in excise regime, in excise, the excise duty was always payable on removal of goods from the factory. So all the manufacturers were habituated to pay tax at the time of removal of goods from the factory. Even if the advance was received earlier, they were not liable to pay tax. There was no liability in excise on advance received. The tax always arose on removal of goods from the factory. The liability arose at the time of removal of goods. Now in GST, the change happened. In GST, they mention advance received, pay tax. Receipt or accrual, whichever is earlier concept, came into picture. So these industry people were very much frustrated. They said that we receive advance, then we manufacture the goods, and then we supply the goods. So we take advance for the purpose of buying raw material, etc., for funding purposes. So we take advance, then we manufacture the goods, then we supply. Why should we be liable to pay tax on advance? And if we pay tax on advance, then our real money in hand gets reduced. So working capital requirements increase. So all those problems came into picture. So government said, okay, election are also coming. Let's give some relief to the people who supply goods. So they issued this notification. What it says? No GST on advance received. No GST. So the clause B, which is there, has been put to rest. Not permanently, but temporarily. Has been put in coma. It has not died. Remember, clause B has not died. It has been put in coma for the time being. You know coma? Coma means where the person is he's living, but his body is not functioning. So he's as good as dead, but he's alive. So here, clause B is alive, but put to coma state. So see what it says. The central government, on recommendation of the council, hereby notifies the registered person who did not opt for composition levy under section 10. Who did not opt for composition levy. So this relief which is given, that you are not liable to pay tax on advance received, is only for normal taxpayers. This relief is not for composition taxpayers. So composition taxpayers will have to pay tax. The composition taxpayers will still have to pay tax on accrual or receipt, whichever is earlier. Means if they have received advance, they have to pay tax on advance. But for normal taxpayers, the relief is given. So what it says? Notifies the registered persons who did not opt for the composition levy under section 10 of the Act as the class of persons who shall pay the central tax on the outward supply of goods at the time of supply as specified in clause A of subsection 2 of section 12. So you will apply only clause A and not clause B. Okay. Including in the situations attracting the provisions of section 14 of the Act. This we'll see. And shall accordingly furnish the details and return as mentioned in chapter 9 of the Act. Even the returns will show only the accrual and not the receipt. And the rules made thereunder, and the period prescribed for the payment of tax by such class of registered person shall be such as specified in the Act. So like the monthly scheme, so that will remain the same. The due dates of payment will remain the same. Only thing is that time of supply will be calculated as per clause A, that is the invoice date or the due date of invoice, whichever is earlier. We are not going to consider the receipt. We are not going to consider the date of receipt. In simple words, the time of supply for suppliers of goods, excluding composition suppliers, will be time of issue of invoice. Thus, GST will not be leviable on advances received against supply of goods. So this is a relief which is given for the time being. You don't know when the government will withdraw this notification. So understood? So if we come back to this chart, it means that for non-composition dealers, that is the normal taxpayers, you will not consider this. You will not consider receipt. So you will consider only the accrual, that is clause A, that is actual invoice, or the due date of invoice, whichever is earlier. Fine? Great. So if the question comes in the exam, right now, till the time this notification is existing, we will not apply clause B. If the dealer is a normal taxpayer, we will not apply clause B. And if he is a composition dealer, then we'll apply both the clauses A and B and take whichever is earlier. Okay? Very good. Right. So that was subsection 2, also called as time of supply of forward charge. When the supplier has to pay tax, that is called as forward charge. So in forward charge, how to calculate the time of supply as per section 12 subsection 2. Finished? Very good. Now comes the reverse charge. How to calculate time of supply in case of reverse charge applicable to goods. So let's see. Subsection 3. In case of supplies in respect of which tax is paid or liable to be paid on reverse charge basis, the time of supply shall be earliest of the following dates. Namely, the date of receipt of goods. So now you have to change your focus, okay? So now you go from the factory of supplier to the recipient's premises. So let's go. You can see the factory of supplier, leave it, exit the factory, go into your vehicle, start your car and drive down to the recipient's place. Okay, so now we are at the recipient's place and we are waiting for the goods to come. So we have come a bit early and now the goods is coming. See, that truck is coming. Oh, the truck is coming. It is bringing the goods to my premises. So I am the recipient, right? So receipt of goods. The goods are coming in. The goods are coming in. So first point, date of receipt of goods. Number 2, the date of payment as entered in the books of accounts of the recipient. Now see, books of accounts of recipient. So we are at the recipient's place. Now what the recipient is going to do as the goods have come. So okay, the goods are coming. We will also see when did he make the payment to the supplier. So we'll ask him, have you issued the check? Have you already issued the check? Yes, I have issued check on 23rd. Okay, means on 23rd you entered it into our books. That's what we do. If I issue a check on 23rd of whatever month, I will put an entry in my books. Okay, on 23rd. So he has made an entry. Or the date on which the payment is debited in his bank account, whichever is earlier. So then we'll ask the accountant to also open the bank account. Then we'll see that, okay, you have issued this check, check number 1, 2, 3, 4, 5 on such and such date of such and such amount. When did it get debited in your bank account? That's also we'll see. Because sometimes you may delay the entry. So if you're delaying the entry, but your check was already gone and it has been debited to your bank account, then that date will be considered, the day of debit in the bank account. So as we are at the recipient's place, he is making the payment. So the check will be debited in his bank account. From supplier's perspective, the check is credited, amount credited. But from payer's point of view, recipient's point of view, he is going to pay. So the amount will be debited to his bank account. Okay, so don't get confused later on. So everything is in the reverse language, debited, whichever is earlier. So this is called as the actual date of payment, the date of payment. So this is, you can say, accrual now, or from the perspective of recipient, we'll call it as incurred. When does your liability to pay arises? So this is called a liability to pay. When the goods are received, you become liable to pay. And this is the actual payment. Okay. So like accrual means right over the income. So incur means liability to pay. So we'll call it as incur. This is when the expense is incurred, and this is when it is actually paid. Whichever is earlier we are going to take. Or the third point is also given, the date immediately following 30 days from the date of issue of invoice or other document by whatever name called in lieu thereof by the supplier. So we'll see there are different documents also in due course of time. There's bill of supply and this and that. We'll see. But right now you remember invoice. So the supplier had issued the invoice, and then in the next 30 days neither the goods are received in your premises nor you have paid the amount. I mean, nothing of these two happen within 30 days. Then what this point says, that as soon as the 30 days period expire from the date of invoice of the supplier, you are deemed to have incurred the liability to pay tax. So 30 days is the maximum time which is given for you to receive the goods and make payment. If nothing happens in A and B, then as soon as the 30 days period expire, you become liable to pay tax on reverse charge. Yes, now you will say, I haven't received the goods yet. Losses, but still you have to pay the tax. We can't wait beyond 30 days. We can't wait beyond 30 days. So as soon as 30 days period expire, the recipient would become liable to pay the GST. Okay, so this we'll call as the waiting period. In Hindi it is called as intizar. Right, so if you understand, there was a song, there's a Hindi song. Even if you don't understand, forget it. But don't complain please, because sir don't speak in Hindi. This is just a song. इंतहा हो गई इंतजार की, आई ना कुछ खबर goods की, है ना? So government says that we'll wait for 30 days. If the goods don't arrive within 30 days, or you don't make payment within 30 days, then as soon as the 30 days period expire, the liability to pay GST will arise. We can't wait beyond that. So the date immediately following 30 days. So I was writing here, this is the waiting period. So which date will be the date of supply? 31st day. Day immediately following 30 days means which day? 31st day. Okay. And the proviso says, and then I'll explain with some diagrams, provided that where it is not possible to determine the time of supply under clause A, means there is no records. Suppose there is a person and he keeps no records. So when did the good come? I don't know. When did you make payment? I don't know, because we have paid cash. So there are no records. There are no records, and we don't even know. We don't remember when did we pay. Or C, we don't even have the invoice. The invoice of the goods purchased. That is also not there. So we can't calculate 30 days. So A, B and C are all irrelevant for us. We have no records of the goods coming in. We have no invoice. And we have no records of payment made. Nothing. We are blank. So in that case, the time of supply shall be the date of entry in the books of accounts of the recipient of supply. Whenever you enter these goods in your books of accounts. And suppose if you say that, sir, we have not made any entry in the books also, then you are safe. Then nothing will happen. You are not liable to pay GST. See, who is put behind bars? Not one who commits the crime, but one who is caught. So you should be caught. Means somewhere the entry should be found. If no entry is found, no invoice, no receipt of goods, nothing, no payment details. If nothing is there, then you are safe. Then there is no liability to pay GST. But the problem arises when this entry is found in your books. Stock entry or some kind of entry is found which shows that you have bought the goods, which are liable to be paid by you under reverse charge. So then this entry will become the time of supply. Okay, So let me explain this with help of some examples. Very simple points. See, this is the supplier. We'll make a good diagram for you to imagine the whole situation. And here is the recipient, who is chargeable under reverse charge mechanism. So the supplier makes an invoice on 22nd of June and supplies the goods to you. Okay, so the goods along with the invoice come to you. Now normally you would receive the goods. Okay, so when you receive the goods, there is a date. So that date will take the date of receipt of goods. And then you make a payment. So you make a payment to the supplier. So we'll find out the date of payment also, which will be book entry or debit to bank account, whichever is earlier. Okay, whichever is earlier. Book entry of payment or debit to my bank account, whichever is earlier. Now, if any one of these two happen within 30 days of this date, if any one of these two, you receive the goods or you make payment, or both happen within 30 days of this, then we'll take whichever is earlier, receipt or payment, whichever is earlier. But if none of these two happen within 30 days of this date, the invoice date, then the 31st day from the invoice date will become the time of supply for the recipient, and the recipient would be chargeable to tax under RCM on the 31st day from 22nd June. Okay, do you get the concept? Very good. So let's take an example. So here I'll write invoice, though we have got a lot of examples in the book. Then receipt at the recipient's place, receipt of goods, and payment and time of supply. Okay, let's do it. So if invoice is on 20th of July, receipt of goods happen on 27th of July, and payment is also made within 30 days on 30th of July. So both of these are happening within 30 days of invoice. So then we'll take whichever is earlier out of these two. So 27th or 30th, 27th. So 27th will become time of supply. Simple. For the recipient to be liable to pay tax under RCM. Second, invoice is again on 20th of July. Receipt of goods happens on say 10th of August, but payment is made after 30 days. So payment is made on 3rd of September. But at least one of the thing has happened within 30 days. So this 10th August, that is again earlier of these two, will become the time of supply. Okay. Third case, let's see. This is again 20th of July. The goods are received after 30 days. Goods are received on say 7th of September. But we had made payment within 30 days of 20th of July. Means payment was made on 6th August. 20th July, 6th August, it is within 30 days. So then this 6th August will become time of supply. So if both of them are happening within 30 days, or at least one of them is happening within 30 days, then that will become time of supply, means the earliest of these two. But if both of these, receipt and payment, are happening after 30 days from 20th July, then what will happen? So So if this is 20th July, the receipt is on 7th September, receipt of goods, and the payment is made on 22nd of September. Then what will be the time of supply? 31st day after 20th of July. So count. 20th July is there. From 21st July you count 30 days. Now July is of 31, 31st July you have. So 11 days of July. Right? 11 days of July. And 19 days of August. So 19th August will be 30th day. 20th August will become 31st day. So 20th August will become time of supply. See again, how have I calculated? You have to leave this date. You have to count from 21st. So 21st July to 19th August are the 30 days. Okay. 21st July. It's very simple. 21st July to 31st July. You have 11 days here. So 19 days there. 11 and 19 total 30. 19. And then the next day, that is the 31st day, will be time of supply. 20th of August. Understood? Very simple. Then let's see further. Next is again a very interesting point. Point number 4. That is subsection 4. In case of supply of vouchers by a supplier. Supply of vouchers. Underline vouchers. We have discussed this point sometime earlier also, that vouchers are also taxable. Now what do you mean by voucher? A voucher which entitles you to purchase the goods at a future point of time. Shop vouchers. I'd given examples also in those definition section that I have I remember the example. I am giving gifts to my meritorious students. Yeah, it was a good example. So what I do is I pay 50 lakhs to Mercedes-Benz and I take a voucher from there. A voucher which entitles my student who has come first merit all India to buy that car. Now I will not take delivery of the car and give it to you, because you may be staying somewhere else in some other city and I am in this city. So if I book a car here, then all the number and everything will come here, the RTO registration and all. So you will face problem in your state because of all the RTO rules. So what I do is I just pay 50 lakhs to Mercedes-Benz, and this is real example, this is not a joke. I pay 50 lakhs to Mercedes-Benz and take a voucher that 50 lakh has been paid. Then that voucher I will give to you in a great grand ceremony. So we'll call Amitabh Bachchan and Shah Rukh Khan and all these people, and then we'll give you that voucher in a great celebration. Okay. Now as soon as I give you the voucher, then you will go to your city's showroom of Mercedes-Benz whenever you feel right, and then you will give them this voucher and take delivery of the car worth 50 lakhs. Okay. So what will be the time of supply of this voucher? When Mercedes-Benz Nagpur gave me that voucher, what will be the time of supply? Means when will Mercedes-Benz be liable to pay GST? When they gave me the voucher, at that point of time, or when you redeem the voucher at that point of time? Which will be the point of time? So let's see. There are two situations given here, and I have already explained this if you remember. If not, don't worry, I am again going to explain it. In case of supply of vouchers by a supplier, so supplier here means the Mercedes-Benz showroom, the time of supply shall be the date of issue of the voucher itself, if the supply is identifiable at that time. If it is identifiable at that time, then at the time of issue of voucher itself. So by identifiable means what? The goods. Identifiable means goods. Goods against which goods against which the voucher can be redeemed. Goods against which the voucher can be redeemed. Okay, now why? Okay, first read second point also and then I'll explain. Date of redemption of the voucher in all other cases. So all other cases means where it is not identifiable. The goods are not identifiable at the time of issue of voucher. Now the logic is damn simple, very simple. Let me explain. It's a child's play, anyone can understand. This is Mercedes-Benz Nagpur showroom. I go there, Farooq Haque, and I give them 50 lakh rupees because that is the first price that I have announced, that I'll give to you a car worth 50 lakhs. Okay, so I give them 50 lakhs and take a voucher. So they issue a voucher. This happens on 22nd of July, considering this to be a May attempt. So if the attempt is May, your result will come somewhere in mid of July. Normally 17 July is the result day. So on 17 July you pass, and when you check your merit ranking, it is nothing less than first, and you have scored full 100 marks in IDT. And full 100 marks in DT. Suppose you have taken DT from me. So as per my promise, I have to give to you a car worth 50 lakhs. So I go to Mercedes-Benz showroom, I pay them 50 lakhs and purchase a gift voucher. Okay. Now, two things can happen. When they give this voucher to me, they might have mentioned the car which, or the car itself as a product, car, that this voucher is for car. Or they may have kept it open for the other person to redeem, and at the time of redemption he can choose to buy anything. So these vouchers can be of two types, specific or general. The vouchers can be of two types, specific or general. If it is specific, means the goods are identified. Car. Goods are identified. Car means you can redeem this voucher and only purchase a car for it and nothing else. Or it can be general. General means Mercedes sells so many things. Mercedes company sells so many things. They sell cars, they sell trucks, they sell lorries, they sell buses, they also sell cycles. Yes, I'm not joking. Mercedes-Benz also sells bicycles, but not worth 50 lakhs. They're worth around 1.5 to 2 lakhs or 3 lakhs. So they sell so many things. Now, if they have not mentioned that this voucher can be redeemed only against car, means it can be redeemed against anything. If the student wants to buy a truck, he can buy a truck. If he wants to buy a lorry, he can buy a lorry. If he wants to buy a JCB machine, the Mercedes-Benz will sell him a JCB machine. Okay, you can buy anything. It's a general, means any goods. Any goods can be bought. Now, see what the problem is. Problem is, if it is specific, then on 22nd July itself we know that this voucher will be redeemed in future. Voucher is, for example, valid for 6 months. So in 6 months you can go and purchase anything you want. But in this case, we know that you are going to buy a car only and nothing else. And on 22nd July, we know the rate of tax applicable to car. We know the rate of tax. So we can apply that rate of tax on 50 lakhs and charge tax thereon. Right? It is possible to calculate tax on 22nd July itself because we know the rate. So as we know the rate of car, we can calculate tax here itself. So the time of supply is determined to be the date of issue of voucher itself, that is 22nd July. Got it? That is the logic. So time of supply will be 22nd July itself. and not when you will go and redeem the voucher. So you may go and redeem the voucher on, say, 19th of September or maybe December, anytime. The voucher is valid for 6 months, so you can go anytime. So if I give you an example, so Farooq takes his voucher, then he hands over the voucher to the student, gives to student in a grand ceremony, and the student goes to MB, Mercedes-Benz showroom of his city, and redeems the voucher. This redemption takes place on, let's see, 11th of November. So he redeems it on 11th November. But in this first case, as we know the goods that are going to be redeemed, we can calculate tax here itself. So time of supply will be 22nd July itself. We will not wait till redemption. But in this case, in general case, on 22nd July, we don't know which goods he is going to purchase. So we don't know the rate of tax to be applied. Should we apply the rate of tax applicable to truck or a car or a bicycle? What? We don't know. So we will wait. In this case, we'll wait. We'll wait till he redeems. Because as and when the student goes to Mercedes-Benz and he says, I want to take a truck, we will apply the rate of truck. If he says, I want to take a car, we will apply the rate of car. If he says, I want to take a bicycle, we will apply the rate of bicycle. Right? So when he redeems, we know the goods. And when we know the goods, we know the rates. So we can apply. So therefore, the time of supply in this case will be 11th November. That is redemption. So the logic behind these 2 points is the rate. When will you come to know the rate of tax applicable? Understood? Simple? Great. So that was regarding vouchers. Then coming to subsection 5. Now it is simple. Where it is not possible to determine the time of supply under the provisions of 2, 3 or 4. Means if the above logics fail, there may be a situation where the person is a full tax evader, so he has not kept any records altogether. No record for receipt of goods or supply of goods, no records, no invoices, and no payment receipts, nothing. Then time of supply shall be, but then he's caught one day by the department. They put a raid on him and they catch him. Then what will happen? Time of supply shall, in a case where a periodical return has to be filed, means if he is a registered person. So besides A, write down he is a registered person. He took registration under GST. So he is a registered person. If he is a registered person, he was liable to file his returns. Be the date on which such a return is to be filed. Is to be filed means due date of return. So whatever was the due date of return, though he has not filed it, he may not have filed it, but the due date is there. So that will become the time of supply, the due date of return. And in any other case means he is an unregistered person. He did not even take care to get himself registered. Unregistered. Be the date on which tax is paid. Means the day when he is caught and the day when we are assessing his liability to pay. So that itself will be considered as the time of supply. Means today when you are caught and I am assessing your tax, today is the date of supply. So whatever rate is applicable today, I will apply and assess your liability. So this is basically for the tax evaders. And then at the last it is given that the time of supply, to the extent it relates to addition in the value of supply by way of interest, late fee or penalty for delayed payment of any consideration, shall be the date on which the supplier receives such addition in value. So this is a case where I give you goods, I give you an invoice of say 15 lakhs. So time of supply for 15 lakhs will arise and we'll pay tax. But you make delay in payment, so I charge interest, or I charge late fee, or I charge a penalty for the late payment. So these three are also taxable. They are also taxable. And what will be time of supply for these amounts? Because these amounts are not written in the original invoice. These are additional amounts that I receive because of delay. So for these three items, or any one of them, it will be date of receipt. As and when we will receive, that is the point of supply. Very simple. So that was the case. Now coming to analysis, it is simple. You have already understood everything. So that first part is simple. Then definition of time of supply. In case of forward charge, date of issue of invoice or payment, whichever is earlier. Then how to determine the date of invoice. How to determine date of invoice. So in that section 31 is referred. So that 31 I have already explained to you, but that is given here. That is, in case the registered person supplying taxable goods shall before or at the time of removal of goods for supply to recipient, where the supply involves movement of goods. When do you have to issue invoice? Before removal. So removal here means when you are giving the goods to transporter. When you hand over the goods to transporter, that is called as removal. So at that time you have to issue the invoice. And second is delivery of goods, where there is no movement, there is no transporter involved, then delivery of goods. That is the point when you have to issue the invoice. Issue a tax invoice showing description, quantity, value, and so on and so forth. So removal or delivery, these are the two important words you have to remember. Then how to determine the date on which supplier receives the payment? Earlier of the two, entry in books or credited to his bank account, whichever is earlier. Then what will be time of supply in case amount received is more than the amount indicated in invoice? That is the case. Up to 1000 rupees you have a choice. Either apply subsection 2 or the proviso. The proviso says date when the invoice will be issued later on in respect of this excess amount. So that is called as a forward charge, and therefore the examples are also given. Invoice date, invoice due date. So out of these two, whichever we'll take whichever is earlier, right? Then entry in supplier's books or bank credit. So this also will take whichever is earlier. Now logically this is accrual, this is receipt. Accrual or receipt, whichever is earlier, will become time of supply, right? So 10th October, 20th October, 10th October, 26th October, 30th October, 26th. So this is 10th accrual and this is receipt. So normally we'll take whichever is earlier, 10th of October. Accrual is before. So accrual, I like A. This is a code word for you, okay? A. Then advance received, 30th, 20th. First of all we'll take the invoice. So 30, 20, 20. 10 and 30, 10. Then these two, whichever is earlier, so 10. But this is the advance case, okay? So here you will also mention the notification. Notification. I just write noti. So here the notification, if applicable, means if this person is paying tax under normal scheme, then 10th October will not be considered, 20th October will only be considered. But if he is a composition dealer, then 10th October. The exception notification. Then next, 26th and 20th, 20th. 26th and 26th, 26th. Which one? Any one, it is 26th only. then 20th and 26th, 20th. 10th or 20, 10. 26 and bank credit, no credit, still 26th. 10th or 26th, 10th. Then part payment case. The bill is 1, 30, 30, 30. Entry passed on 14 November, but there are 2 checks probably issued. So one gets cleared on 30th October and one gets cleared on 20th November. So if I compare these two, it will be 30th October. And then if I compare 30th October, it will be 30th October. And this is, if I compare these, and if I compare here, then 14th or 20th, so 14th will be the case. 30th or 14th, 30th October, whichever is earlier. And the division is 40% and 60%. So 40% payment is received here and 60% is received here. So for the first 40%, the time of supply will be 30th October, and for 60% also in this example, it is coming to 30th October only. So for both it is 30th October, but we are applying different rules. They are considered as separate. Because suppose if this was 25th, then this would become 25th, but this will remain 30th. Then 30th and 5th, 30th, 26th and 10th, 26th. To 30th or 26th, 26th. But this is again advance. So if this is advance, you have to write the notification again. That as per the recent notification, if you forget the number, if you remember, then write as per notification 66. If he is a normal taxpayer, we will not consider advance. So time of supply will be 30th October only. But if he is a composition dealer, then time of supply will be 26th October. The next 20, 10, 20. 26 October, 10 November, 26th. 20 or 26, 20th. Very simple. Okay. Then we'll see a new point. A new point. And this is continuous supply of goods. Now, section 12 doesn't mention anything about this. But invoice section, which is there, section 31 clause 4, it says that in case of continuous supply of goods, invoice has to be issued on event basis. As and when certain portions are done, the events are done, the invoice has to be issued. So there will be separate invoices and therefore separate time of supply for separate invoices. So let's see. So see what 31.4 says. In case of continuous supply of goods where successive statement of accounts or successive payments are involved. So successive statement of accounts means whenever as per the contract, whatever we have fixed, like this happens in mining industry. I had told you earlier also. In mining, like I will be supplying goods to you on a continuous basis out of my mine. And then, depending upon time or depending upon quantity, I will make statements. That right now, suppose if it is quantity based, so I'll supply first truck and then second truck and then third truck. And whenever 1000 tons will happen, I'll make an invoice for that. Then again 1000 tons, I'll make an invoice for that. Then again 1000 tons, I'll make an invoice for that. So it can be like that. Or it can be on time basis. That from Monday to Saturday, whatever goods are removed, we'll make one invoice. Then again next Monday to Saturday, then again next Monday to Saturday, and so on and so forth. So every Saturday, I'm going to give you an invoice of whatever goods are taken in that week. So it can be on any basis. So what I'm going to do is issue successive statements. So I'll issue statement on one weekend, then another weekend, then another weekend, and so on and so forth. Or successive payments are involved. Suppose I'm not issuing statements, but you are making payment every month or every 15 days or every Saturday. So that we'll consider. So it can be statements or it can be payments. The invoice shall be issued before or at the time each such statement is issued or each such payment is received. So every Saturday, if I am making a statement of the goods that you have taken during this week, then as soon as I make a statement, I will also have to issue an invoice. So every Saturday I'll make a statement and I'll also make an invoice. Or if it is payment based, no statements issued, but you make payment on regular intervals. So as and when you make payments, I'll have to issue invoice. So that becomes the due date of invoice. So then let's see an example on that. It's very simple. What we have to do is apply the same rule, the actual invoice or the statement, because this is the due date of invoice. So whichever is earlier out of these two, and receipt of payment is given, and then compare and see whichever is earlier. That becomes time of supply. So 1st November, 5th November, 1st November. 1st November and receipt also 1st November, so 1st November. 11th December, 5th December, so 5th December. 5th or 11th, 5th. 8th January, 5th January, 5th January. 5th January or 1st January, then 1st January. But here again notification has to be written. Exception notification. Because 1st January is receipt, so this is advance payment. So this is case of advance. So we will write notification that if the dealer is a normal taxpayer, then 1st January will not be considered. Time of supply will be 5th January only. And if he is a composition dealer, then 1st January. Understood? Then reverse charge is given. Reverse charge we have seen receipt of goods, date of payment or expiry of 30 days, whichever is earlier. I have told you the logic. And what if for any reason one of these 3 days cannot be determined? Then entry, the proviso, entry of service in the books of accounts, means entry of the expenditure, you can say, in the books of the recipient. And what is the date of payment under reverse charge? The book entry or the debit to bank account, whichever is earlier. Remember, accounted in the books or debit, date reflected in the bank account means debit. Okay, but here it is wrongly mentioned as supplier, you please mention as recipient. Make it recipient. Recipient. And so copy paste error basically. So date reflected means debited in the bank account of the recipient. Okay. And the same thing. So date of invoice is given, we have to count 30 days from here. Removal of goods is of no use. We are not concerned with. Removal of goods, of course, when the invoice should have been made. Receipt and payment. So these two we'll consider whichever is earlier normally, if any one of them is within 30 days of this date. If not, then 31 days after expiry of this date. Okay. Now see, 31st October is the date of invoice. 20th November, 30th November. So we'll take whichever is earlier, that is 20th November. Out of these two, whichever is earlier. 20. And is this within 30 days of this? Yes. So therefore 20th November. Next, 20th November, 5th November, 5th November. Is this within 30 days? Yes. So 5th November. 5th Jan or 0. So 5th Jan. But is this within 30 days? No, it is not. So therefore what we'll do is we'll count 30 days. So 31st October is the date here. So 1st November. 1st November to 30th November will be 30 days. These are the 30 days. So the next day means 1st December. So please make correction there. This is not 30th November. This should be 1st December. 31st day. So 1st December will become time of supply. Then in case of vouchers, if identifiable, if the goods are identifiable, then date of issue of voucher. If goods are not identifiable, then redemption. Very simple one. Definition of voucher is given, we have already seen, which entitles you to purchase goods at a later date. Coupons, tokens, you just have to go through this theory once if you want to. And the residuary, that is also theoretical. And special charges for the delay in making payment, that is also simple. And the last is interesting one, goods sent on approval. So in case of goods sent on approval, the due date of invoice is different. So you have to study that. What is the due date of invoice? 31(7) applies. It says, notwithstanding anything contained in subsection 1, where the goods sent on approval are removed before the supply takes place, the invoice shall be issued before or at the time of supply. Supply here means the actual acceptance. Supply means approval. When the goods will be approved by the other person, the supply takes place. Or 6 months from the date of removal, whichever is earlier. So let's take an example. This is the supplier. He removes the goods and sends it to the other person for his approval. This removal takes place on, say, 1st of October. Okay. So 6 months from this date, we'll see. 6 months. 6 months will expire on, so as it is 1st of October, so 6 months will expire on 31st of March. October, November, December, January, February, March, 31st March. Of whatever year, I don't know. March. Okay. Now, if this person accepts the goods within 6 months, suppose he accepts it on 10th of Jan, then this 10 Jan will become supply. So this 10 Jan will become time of supply. So we'll immediately pay the tax. But if this person sits silent for 6 months and he doesn't do anything, neither he returns nor he accepts, then expiry of 6 months will become time of supply. Means tax will become payable on 1st of April, immediately on expiry of 6 months. Means it will be considered as deemed supply on expiry of 6 months. Simple. So that is also given, a simple example. Removal is given, so we'll have to count 6 months from here. Issue of invoice is given. Accepted by the recipient, so accepted by recipient means supply, and receipt of payment. So receipt of payment has to be considered. So normally, if this happens within 6 months, then we'll take the date of acceptance. So this will be considered. So this will become the due date of invoice. This is the actual invoice. Okay. So we'll take in these two whichever is earlier. This is the due date of invoice. This is the actual invoice. This is due date and this is actual. So whichever is earlier will be considered as accrual, and this is the payment. So out of these two we'll take whichever is earlier. Then we'll compare it with payment and take whichever is earlier. But that should happen within 6 months. If no, then from the expiry of 6 months. Confusing? Let's see. You'll understand. So first you see that this acceptance is in 6 months or not. So 1st November is the date of supply. This is 15. Is it within 6 months? Yes. Okay. Now take these two. Whichever is earlier? 15th. Compare 15th with 25th. Which is earlier? 15th. So first check this, 15 November. Is it within 6 months from here? Yes. Then compare these two, 15th or 25th? 15. This is accrual. And this is receipt. So accrual or receipt, whichever is earlier, receipt. But this is again advance payment. So write notification 66. Subject to notification number 66. Then 15 May, 1st October 15 May, 1st October 15th May, 1st October 15th May. Is it within 6 months or more than 6 months? More than 6 months. Then we'll not wait here. What we'll do is we'll count expiry of 6 months. So expiry of 6 months will be on 31st of March. So 1st April. So this becomes 1st April. So my invoice due date should become 1st April. And I'm making invoice on 15 May. Now calculate 1st April or 15 May, whichever was earlier, 1st April. Receipt 2nd May. So 1st April, 2nd May, 1st April. Understood? Simple. So that was section 12 along with all the examples and explanations. That was time of supply of goods. Next lecture we'll see time of supply of